Gold prices forecast, safe haven demand rises amid Middle East tensions. Key points. Gold trading higher for third session, still below $2,030.36 50-day moving average. Rise in prices driven by softer US dollar and Middle East geopolitical tensions. Federal Reserve's interest rate policy and inflation data pivotal for gold market. Technical analysis. XAUU/USD is edging toward the 50-day moving average at $2,030.37. This price is likely to act like a pivot over the next few days. A sustained move under the 50-day MA will indicate the presence of sellers, who will be defending the intermediate trend. A break back under the pivot at $2,009 will indicate the selling pressure is getting stronger. This could lead to a near-term test of the 200-day moving average at $1,965.34. This moving average is controlling the longer-term direction. Overcoming the 50-day MA will be a sign of strength. Turning the intermediate trend higher could trigger a surge into the resistance at $2,067. Market overview. Gold is trading higher for the third consecutive session on Monday, yet it remains below the crucial 50-day moving average of $2,030.36. This movement in the gold market reflects a complex interplay of global economic and geopolitical factors, along with shifting market sentiments influenced by key economic indicators and monetary policy expectations. As of 8 o'clock Greenwich Mean Time, XAUU/USD is trading at $2,020.70, up $7.47 or plus 0.37%. Market trends. The recent rise in gold prices is primarily driven by a softening US dollar and increasing tensions in the Middle East, particularly concerns around political stability and oil supply disruptions, which enhance gold's status as a preferred safe haven asset. This uptick occurs despite a downturn in the previous week, indicating a shift in investor outlook. Economic data impact. The impact of recent economic data releases, such as the Consumer Price Index, CPI, Producer Price Index, PPI, and retail sales figures, is significant in shaping the gold market. The CPI and PPI, reflecting the current state of inflation, are key in influencing investor expectations around monetary policy and interest rates. These inflation indicators often drive investors towards gold as a hedge against currency devaluation. Retail sales data, highlighting consumer spending trends, also play a crucial role in assessing the economy's health and signaling potential economic directions. Federal Reserve's role. Investor focus is intensely on the Federal Reserve's policy decisions, particularly the details from the January meeting minutes. The Fed's stance on interest rates, informed by recent inflation data, is a vital determinant of gold's valuation. The possibility of delayed rate cuts, as suggested by the Fed's current position and the diverse views among policymakers, could significantly influence gold's market performance. Short-term forecast. Considering these elements, the short-term outlook for gold appears somewhat bullish. The metal's value is expected to respond to inflation concerns, the dollar's performance, and the Federal Reserve's policy decisions. Key upcoming economic reports and Fed statements, particularly regarding inflation and interest rate policies, will be crucial for investors to monitor. The market remains sensitive to these developments, and investors should stay alert to gauge the future direction of gold prices.